Yo, what is up, guys? Camilo here. I hope you're well. So the markets keep on giving us a little bit of indecision, okay? And I I'm just still in the fence as to what we should. I mean, we've seen a positive bounce off some key levels that we've been mentioning here in this video, but at the same time, we haven't been able to shake out to new highs yet. Okay, and that's mainly in our opinion also due to tomorrow's OPEX. All right, options expiry dates. So I presented this chart to you guys previously on the SPX, showing you guys key dates. All right, on on June the 6th, June 18th, July 16th, August 19th, and then tomorrow, September 17th. And why am I bringing these up? It's because we saw four patterns, right? Four times that the market dipped on OPEX and then it rallied. So dipped, rally. And now the question is, are we going to follow the trend? Are we going to follow this trend here, this pattern? And that is yet to be seen. But I want to present to you guys two alternates that I've also shown here on the channel. And each alternate, both of them, one suggests we're still going to head on higher to new all-time highs. And then the other one is suggesting that we are in the makings of a pullback already in the primary second wave degree. Okay, that's going to correct this entire move. Now, I know some of you guys are, I know, and I see it in the comment section below saying that one day I say crash, one day I say, we're off to the races. But the reality is that we always have to have two alternate accounts so that we can prepare ourselves for whatever the market throws at us, because not one scenario is ever likely. You always have to have, your plan B, okay, in case plan A does not work. And plan A for us right now is still bullish. We still want to head on higher, and we're preparing ourselves over at trending waves for that scenario. Okay, not that I bring that up, if you want to join trending waves, the link to the Discord group is pinned down in the comment section. You just join in for free, click on the link, sign up, and join for a couple of days, and we'll take it from there. Also, thank you for subscribing to the channel. Give me a thumbs up if you like the content that I've been putting out. Click that bell notification so you'll be notified when I upload these videos. And thank you so much for your time. So I'm going to spend a little bit of time on the S&P or the SPY here. All right, so from the daily time frame, let me turn on the labels. So as the 200-day simple moving, the 50-day simple moving average keeps on curling up, we see the price action still hovering above it. We haven't had a true test of it yet because we're still holding these key levels of support, as you can see here clearly. All right, now taking you down to the 30-minute time frame where we will dissect this wave count. So we're gonna start off from August the 19th low, and I'm gonna walk you guys through this. So August 19th was here, okay. So we did 5 waves up. This was monthly expiry, right? 1, 2, 3, 4, and 5 to complete the wave 1 in this degree here. Now we set a high, and we're now looking for the pullback to retrace or to correct this entire rally. Now this retracement has us at around 50% to the 618 of the entire move. Now, as you can see here, we gapped up on August the 23rd, but we've already filled that gap, and now we're seeing some reaction out of it along with the fib levels that I've outlined. So the wave count coming out of this zone here, this retracement of this correction, goes as follows. So down in A, up in B, down in C, all right? And now if this is the true wave count, we must break above the low of wave A, which comes in at 448.87. That's key level for us to keep our eyes open for. All right, so if that's the case, then this is the start of the wave 1 completed today. Pull back into wave 2, and now we're in the makings of wave 3. This could take us anywhere, right? This can still go down in, this can still go down in A, up in B, down in C, and then we go, or this could now, this could still now go head on higher. So this zone here of resistance is what keeps me worried. Okay, you can see here that this area is in confluence with this previous price action. So until we break above this cluster here, that will be a good sign for us to head on higher. But until then, we want to stay clear and let the markets do what they want to do. So when we pull back into wave 2, we found support at the 78.6. Excuse me. So my trigger to say, okay, now this whole structure or this entire move from from COVID lows of 2020 has come to an end. All right, and what is that trigger? So I want to see price action break below the previous day low, okay, or 443.23. I want to see price action fall below it for me to consider that this whole wave structure is invalid and we're off to our alternate count, okay, which I'm going to take you guys over right now. So over here on this alternate count, okay, on the daily time frame, we are suggesting that the wave A is at play right now. Okay, we're still holding the obviously the 200-day simple moving average, but it will consider that we're going to lose it. Okay, so we found our top between the 23 and the 38.2 of the wave intermediate wave degree in the green count, as you can see here, and we found the top at the primary degree wave 1, and now we're looking for a 3-wave pullback to the wave 2. Now, a lot of you may be thinking that this is a all-out crash, and it may not be. Most likely it's not. We just got to correct this entire move. Okay, this is a big rally that needs to get corrected, so a healthy pullback such this could be at play. Now, taking you down to the 30-minute time frame, I haven't shown you guys this wave count, but let me show you what it looks like. So from the top here, okay, on September the 2nd, we went down in 1. We retraced that move into the second wave, which found resistance at, oops, give me a second. It found resistance clearly at the 618. You see there? So that checks out, right? Wave 2. Now wave 3. Retrace back into wave 4. We did not break in validation as wave 4 did not go beyond the territory of wave 1. And now we made a low in the wave 5 back in August on September 14. All right. Now we are retracing this entire wave 1 structure in the minute degree, right? We went up in A today, down in B, and now we were shy to wave C. So 50% retracement support of this overall wave advance in the wave 1 came into resistance for the wave 2, which is a key level, right? 50% retracements to the 786 are key or common levels for a wave 2 pullback. Now, if we cannot break above the zone, just like in our alternate count, right, which is here. So I'm gonna put these side by side, both in the 30-minute time frame. Okay, one suggests we go down, the other one suggesting we're in the makings of an impulsive structure to the upside. So we got to break below the previous highs today or this cluster, okay, to consider a bullish count. If we fail and we make a low here at 443.26, then we may consider that this whole thing is at play, our bearish count. And the way we're going to trade this, guys, taking you over to the daily time frame, is that once that is confirmed, right, wherever this falls, then we would like to see a 3-wave pullback to the upside, okay, to wave B to correct this entire down structure into the wave B, and then we'll take a short trade down to take advantage of the wave C. All right, which wave C's are normally the waves that we got to take on the corrective move for on the corrective structure. Those are the waves we take trades on. We don't take trades on the A wave nor the B wave. We wait for these two to unfold so that we can confirm the C wave. That's what a smart trader will do. All right, so that's the game plan, guys. So be patient. We have to wait for confirmation. We have to wait for these zones to be broken above. Okay, as you can see, it's, I mean, without even putting the labels on, you see here that price action is having a hard time breaking above it. Okay, so just keep in mind that, and we'll be ready to rock and roll. All right, now let's take you over to the Qs. We're going to present the bullish counts on the Qs, right? So off the August 19th low, wave 1 down in A, up in B, down in C. All right, although now the Qs here, this is what kind of like puts me on the fence, because the Qs broke the highs, okay, but they're not sustaining it obviously into the close, but we haven't broke above the wave A. So we got to break above wave A at 379.06 to consider the fact that we may continue on higher. Otherwise, the low of the 38.2 or even the low of yesterday, 30.73.39, would be the trigger for us to consider downside moves. All right, so keep those two levels on watch, 379 and 373. Over to the SMH. SMH, not much different, okay? We're still existing within this range, okay? We're still calling this the wave B. Very strange wave B, if you ask me, okay? But, you know, down in A, 1, 2, and 3 in the wave B, very sideways, still corrective. It's still, I mean, look, right? How can we, this is why I'm on the fence, guys, because how in the world can we, with a chart like the SMH, okay, with a chart like this, okay, I'm not gonna highlight this, so just pay attention to this structure here. How can we call this the end of that cycle of this entire rally? All right, this still looks positive. This still looks bullish. All right, even our indicators are still showing upward momentum. So that's why I'm on the fence. But the SPY is what we're using for our proxy to consider what's gonna happen. So yeah, so just keep that in mind. Okay, the SMH chart still looks good, still looks bullish for further upside moves. I mean, we may see a little bit of a pullback, okay, down to these support zones, 268 and 264, but that is yet to be determined. We will see. All right, IWM is acting very well off our fib zones. Okay, we had a deeper than expected move, okay, to down to the 618, between 50 and 618, that corrected this entire rally. So A, B, and C, but now we're reacting out of it. 1, 2, we made a new high. So this may be the confirmation of the start of the next leg up. All right, guys. So not until we see clarity out of the SPY is what I am looking for, and I'm using as my proxy to consider the overall moves in the markets. We want to break above 448.87 and stay above 443. All right, to consider the upside moves. All right, guys. So that was a quick one for me tonight. Just keep your eyes open for these levels that I outlined. Join Trending Waves and give me a thumbs up in this video if you enjoyed this content. Also consider subscribing to the channel. I'll see you guys tomorrow. Take care. Bye.